We're going 3, 2, 1.
Hi, everyone. Dale Pinkert here at TradeGATEHub.com, and I've been chasing Stephen Penny for, I don't know, maybe a year now, because if you see what's before you, his charts are like Picasso's. And I noticed him on Twitter, and I've been following your work, Stephen. It's really a pleasure to meet you finally and have you here to have a conversation.
Yes, sir. Thank you for the invite. Sorry it took so long for us to finally connect, but I've been following you for a little bit here as well. And I love your heart to teach. I love your experience. So I expect to, glean a lot from you as well. So looking forward to a good conversation.
Right. Okay, Stephen. So your handle is Silver Chartist. But before we get to the markets, I'd like to talk to you a little bit about your journey into the business. When did you know, or when did you first get involved in financial markets? Because I know your other vocation is you're a pilot.
Mm-hmm.
So when did the markets enter your life?
I think it goes back to around 2001 after 9/11. For many people, that was a big wake up call. And I started kind of digging into, how the world really works. And because that was a moment where I realized, school doesn't teach you everything. There's a lot of valuable things that school doesn't teach you. And that was when I started kind of my self-education journey. Then we had the 2007, 2008 financial crisis. And that's where I really started digging in. I mean, I would just have textbooks and be reading textbooks and Creature from Jekyll Island and just things that aren't taught in school.
Yeah.
And so I don't have any kind of, I didn't go to school for this. I don't have a background in this as I didn't work on Wall Street or anything. It's all self-taught, but I immersed myself in it. I like to tell my kids self-education has the highest return on investment. I could just send you to a school and you can come out with a degree, but if you're not into self-education and personal development,
you have to be hungry. You have to be hungry for the knowledge and wisdom.
Yes.
Self-education doesn't come to the lazy. Mm-hmm. Stephen, people on Twitter and on social media say, well, sign up with me for a certain amount of money and I'll teach you the secret of trading. When I could tell you are an example of that there is no secret.
No.
The secret is hard work and living through adversity. And if that scares you, do something else.
Yeah.
That's what I tell people. So any books, since it doesn't seem like you had any mentors, and maybe you did, any books that were highly influential besides Jekyll Island?
Yeah, absolutely.
For trading.
Yeah, and I didn't have any personal mentors that I knew, but I like to say you can have mentors and having never met the person.
Right.
So, yeah, you can find someone who's a mentor and go read all of their books, and it'll be as if you know them. Yeah, a couple jump out to me. Creature from Jekyll Island, that was kind of a big wake up call one. When it comes to technical analysis, I like John Murphy's book. What's it called? The Technical Analysis of the Financial Markets. It's a big textbook on technical analysis.
And he does a lot on intermarket relationships and correlations.
Yep.
He was one of the first to really kind of bring that out.
Yeah. So I like to say that book changed my life, because learning how the markets work and how technicals work, the joke is it changed my tax bracket, because when you learn how to trade, it can create an extra income stream. So that's one. Another book by Dr. Alexander Elder.
Oh yes.
He's another trader. It's called The New Trading for a Living. And what you'll find with these veterans like yourself, everyone wants to focus on predictions, like, hey, what's going to happen next? Where the professionals, the people who have been doing this for decades, focus on risk management, focus on strategies, instead of, hey, what's going to happen next week? That's part of it. But risk management, having a system in place, treating your trading like a business, are all kind of things that, I've learned from some of these people who've been doing it for a long time.
Yes, you could have a narrative, but like I said, price rules everything. And, one of the narratives that I think Wall Street, and you have the 10-year note up here, is ignoring is most people are benign about what's happening to rates. They're already pricing in easing by the Fed later in the year or next year. And once the 10-year cracked recently, the 360 level for me, it projects 390. I don't know if there's going to be, should there ever be risk off in the markets, and there is risk off in everything but stocks right now. Metals are under pressure from yields. The dollar has turned a lot, not well embraced. So this, long-term downtrend that was broken in 10-year yields is major. So do you see it under 270 anytime soon? That's where we have the breakout test.
Yeah, I honestly wouldn't be surprised to see a back test of that breakout line. But as you can see here on this chart, and like you alluded to,
Yeah,
I think the 40-year bull market in bonds ended, and
right.
with a blow off top in March of 2020, when that 10-year yield got down to, I think, 0.4%, which makes no sense.
Well, that's where SVB and all our banks in the U.S. were loading up on paper, following a Fed mandate, Mr. Jekyll, right?
Yep.
So tell me that he didn't know raising rates at that pace, knowing how banks were positioned, wasn't going to cause what's happening now and capital flight from the banks.
Yeah, people like to say like these central planners are stupid. I don't think they're stupid at all. I think they know exactly what they're doing. Don't always know their exact motive, but I think they're more evil than they are stupid. I think they knew exactly what they're doing. And you can see this yield on this 10-year, it going back decades, it has never risen at a pace this fast, from 0.4% up to, peak about 4.3%. That's going to wreak havoc on the financial system. And I think we're just starting to see the ripple effects.
It's amazing how long it takes before you hit a tipping point. In fact, you could probably say the fact that, you have 4,200 S&Ps, that there's a lot of disintermediation happening, which is what happened in 87. Rates were going up. The dollar was under pressure. And eventually we had the crash because rates will end up affecting the PEs of stocks, etc. But you just never know when that tipping point, it's like the last snowflake to cause an avalanche, right?
Yeah. Are you referencing I like to read Jim Rickards too. He's another one who challenges me to think. So you might be referencing.
I go to the ATM every day to make sure it's not empty, since I read Jim a few years ago. Anyway, so looking at what yields are doing, do you think yields are going to be competition? Because right now they're saying the market's using higher yields as an excuse for selling off precious metals. Do you think that's going to be a headwind? How do they overcome that headwind?
Well, I think it is a headwind. I mean, if you just look at nominal, we know the real numbers are different, but yeah, the nominal yield is higher than one of their favorite inflation metrics. So you can make a case that, hey, we've got positive real yields, which is a headwind for the metals. And I think that's the case right now. But I don't think they're going to be able to keep hiking like this. So I think, nominal yields are going to come back down. Inflation's probably going to start to tick back up here in the quarters ahead. So I think negative real yields are that's going to be the primary trend. And we might have these kind of deflationary impulses where, maybe yields spike positive for, brief periods of time. But I think the overall trend is towards negative real yields. And by the way, that's what these central planners want. I think they call it a financial repression, where inflation gradually eats away the real value of debt. Inflation helps debtors. And who's the biggest debtor in the world? It's the U.S. government and, other governments and around the world.
Okay. So I look at treasuries because I know there are a lot of smart guys that like bonds. Okay. There's Jeff Gunlich likes bonds. I hear a lot of people say buy bonds before bonds have to turn before equities do. A lot of people thinking that they're great value after the worst bear market in history, coming off Civil War interest rates. I mean, the last time we were that low when you were showing the bonds was, the Civil War.
Mhm.
It's a long time ago. I was just a young guy then, so I don't know what I was probably in the fields, picking anyway. So now okay. So this kind of looks like the TLT, which is what
Yes.
I use for a proxy,
Mhm.
and that doesn't look like a bottom to me. Does it
Mhm.
look like a bottom to you?
And by that, are you talking about this right here?
Yeah, that low is going to hold.
I kind of, that's my baseline expectation.
Is it?
Yeah, I
Okay.
think so.
All right.
Well,
Because I showed the TLT breaking down, and there are, they've had plenty of reasons to rally over the last several weeks with pretty weak data in manufacturing.
yeah,
Um, we've had some risk off the last couple of days. They didn't do much. I didn't see much flow into bonds. But so tell me about your base case here in bonds. I'm interested in what's behind your belief that we're going to have a bond rally.
yes, yeah. So let me go back and answer
Because
that.
I'm wrong all the time.
Me too. Me too.
You
And
know,
that's what good traders admit is when they're wrong.
yeah, and when I'm wrong, I reassess and
Yeah.
I flip and look for the next entry. And you know what, Stephen, for me, and is sometimes I have to be the wrong way to know to get the right way.
Mm-hmm.
When it's a struggle with a position for you're not getting a lot of pips your way, but it's grinding against you, is usually a pretty good sign that you're on the wrong side of the market.
Mm-hmm.
I also look for where the stops are, and I'm interested in your look. This is a pretty substantial rally. Is this going to happen because of the recession? And this should light up the metals if you're right
Yes.
about this.
Yes, 100%. So
Okay.
your original question, do I think this was the low? No, I don't. I think we're going to head lower in bonds over the longer term. But
Longer
I
term.
think, yeah, I think the primary, multi-year trend is going to be lower. In other words, yeah,
Okay.
yields are going to go higher. But like we just referenced, yields have spiked the fastest they've ever have, and very rarely does something continue on that trajectory. So I think we're probably going to see a rally in bonds over the short term, maybe up to this primary downtrend line prior to resuming that downtrend. So it could be, what are the catalysts? It goes back to trying to pick that snowflake that's going to cause the avalanche. Rather than focusing on the snowflake, it's easier to focus on the instability of the avalanche itself. But, I think this is probably a decade of primary inflation with deflationary impulses. And if we do get a deflationary impulse along the way, which I think is all but inevitable, bonds will probably benefit over the short term. And for me, it's almost like a hedge where if we do get that deflationary impulse, bonds rally, now that becomes a nice cash position that I can deploy back into hard assets, silver, gold miners, platinum, uranium, which I already have heavy exposure to, but that would allow me some dry powder to scoop up bargains.
Okay. So Silver Chartist, constructive bonds. Do you think it could happen with stocks selling off? You think that's going to be the catalyst, some type of risk off that moves people to bonds? Or would this move in bonds, is it going to be supportive of a blow off in equities as yields come down? Which way you think the market's going to take it should this unfold like this?
Yeah. So I could see two potential catalysts for a nice rally in bonds. By the way, like I said, I'm bearish bonds long term.
Right.
Just want to be clear about that. But over the shorter term,
but you're tactical. Yeah. And
right.
You know what? I think it's great, Stephen, because you interview a lot of people, and they're silver bulls, and they're always silver bulls, and they're always gold bulls, or they're always S&P bears. And you know what? Both sides are right for a while at times.
Mm-hmm.
And do you teach your subscribers to take partial profits?
Yes.
Because sometimes we look at a low and it ends up only being a low.
Yeah.
You participated in it, but it wasn't the low. So if you're not booking something and being tactical, it's going to be frustrating.
Yeah, 100%. I like to say, whenever you push the buy button, have a subsequent plan for exactly when you're going to push the sell button. Because if you just roll with it, pushing that sell button is hard. Pushing the buy button is easier. So taking profits along the way is key.
Do you know what a CIC order is on a stop?
No, I don't use those.
Cancel if close.
Oh yeah, yeah. Yeah. I said I like to set different bracket orders. So I like to have three different stops and 3 profit targets. So I'll set three different bracket orders. So that's automated. I don't have to be here looking at the screen all day. If my profit target's reached, it takes partial profits, or if the stop loss is triggered.
Okay. All right. So this kind of move, I believe, is going to be bullish. At least gold. I don't know if it's going to happen because the S&P's finally top, and I know some patient bears still think we could see 4,300 plus before this bear market rally completes and we head back towards the October lows. What camp do you come in on that?
Again, dealing probabilities, not predictions. So I think a baseline scenario would be, and this is something I know you've had David Brady on the show, and Kyle Heineman, another guy who's contributed at our website, have talked about this as well. But once the Fed says pause, we think that there's a very high likelihood that stocks, general equities, everything, the market goes risk on. And then we don't think I think the Fed is unlikely to go full 180 back to debt monetization, quantitative easing until something breaks. So, once they say pause, I think we could see a big push higher in general equities and in all risk on assets, to include the metals and miners. We could see almost a blow off top in everything prior to, a kind of a deflationary impulse.
Do you think they're there now, Steve? I understand that now. I know what you're thinking about here. Do you think that we're in the pause right now, or we are right now?
Yeah, whether they pause at this next one coming up or the one after, I think it's all but inevitable. They're going to, and once they do, I think we see another big push higher in everything. And you can look at the COT, the Commitment of Traders report for different asset classes. Yeah, and I've got the one for bonds here right now.
Huge net shorts, record.
Yes. Yeah, and that's by the stupid money. Yeah, the smart money is long bonds right now. Same with S&P futures. The smart money seems to be positioned for another big rally prior to some kind of crash or deflationary event later this year or early next year.
WD Gann's looking at 2024 from someone else I interviewed that follows Gann as being a bad year for equities.
Mm-hmm.
All right.
But like you said, what's nice about charts is it's nice to have a baseline scenario, but then if the new information coming in invalidates that thesis, well, I will adapt. That's it's kind of nice about being a trader. It's freeing to not be married to some kind of thesis. I have one, but I'm not married to it, and I'll adapt.
Do you see, I think this is a bear market rally in the dollar. I think it's peaked, but the magnitude of a bear market rally, most people, I think, are underestimating where it could go to. I'm wondering what you're thinking.
Yeah, I like to, one thing charts allow me to do is make if-then statements. So here's a couple. This is a daily chart of the dollar. We've got this kind of downtrend line.
Yeah.
So if we break above this downtrend line, then the path of least resistance might be a rally up towards this 200-day. And then if we break convincingly above the 200-day, well, then, we could see kind of a bounce up. It's hard for me to imagine taking out this previous high here at 114.78. That seems like a very unlikely scenario.
I'm thinking 111.
Okay.
110, 111, I don't know, 78.6 back. Something like that. I think the market's off sides on this because there are a lot of dollar bears. I don't think this rally yet, although it's been kind of relentless, it's not giving you dips to buy, that people are going to hate this rally in the dollar as much as they hated the last rally in equities.
Yeah.
And you think that if the dollar goes to 111, normally that's a headwind. It means less monetary stimulus, more of a tighter monetary conditions. Do you think that
Well,
The S&Ps. I mean, isn't it the wrecking ball? People.
it is. Yeah.
All right, let me you know, pose this question to you. If you get the dollar right, people say if you get the direction of the dollar right, you get everything right.
Mhm.
And they don't all turn the same day
Yep.
or even the same month. But if we have a dollar rally to 111, what do you think would be behind that?
Well, so I'm not sure we get that high. That's not my baseline
Okay.
scenario.
All right.
I wouldn't be, it wouldn't surprise me, but I think if we can get through this downtrend line, then maybe we pop up towards this 200-day moving average.
That's what most people are calling for. You know, about 105, equal the low, the high we had in March.
And if we were to, yeah,
go ahead.
Yeah, sorry, I didn't mean to interrupt you there, but yeah, if we did get up to this 200-day in short order, you know, this RSI would be overbought. You'd be up against resistance, and probably look for some kind of topping pattern below this declining 200-day moving average, and that would probably coincide with, you know, the intermediate low here in the metals. That's kind of my baseline scenario here in the next couple weeks. Maybe a little bit more of a pop in the dollar, a little bit more weakness in the metals before we get a bottom. And by the way, I think this next rally in the metals is going to take out the new all-time highs, and I think, you know, maybe gold $2,500 is a pretty conservative measured move target once we get above once we make new all-time highs, which I can easily see later this year.
Where would you begin scaling into gold on this decline? It's been a pretty good decline, $150 so far or so. You have levels that you would. I have a breakout line at about 1910. But you have all the way down at 1810 as being a possibility.
Yeah, I think that's a lower probability outcome, but I think it's possible. So what I'm doing is I'm having some cash available in case we do get to between 1810 and this 200-day moving average. Call it 1810 up to maybe 1840, 1850.
Yeah,
that's where I'd be really buying aggressively. I'm not sure that happens, but if we do, I want to have some cash available if we do pull back that far. This support line I drew is kind of the first test here. If this uptrend line holds, well, maybe we've seen the worst.
Maybe this is it. Yeah. Okay.
And what's interesting is the miners. See, gold's up here, you know, north of
the miners have been weaker. Than the bullion, right? Especially the silver miners, Stephen.
Yes. So you said, where would you begin scaling in? I mean, I'll be honest, I'm looking to scale in just a little bit. I mean, just nibbling right here. Like here's Hecla, for example. It's just one example. I'm not like this isn't an endorsement of individual stocks and everything, but yeah, like I like this. The RSI was below 30, testing this yellow line, which is the 200-day moving average.
Yeah.
So I love buying oversold issues above a rising 200-day moving average, and it's dancing right along there. So I think that's some of the stocks are beginning to be at favorable entry points.
AG and SILJ are almost at new lows.
Yeah.
AG, especially since they took I think some type of big earnings hit. Yeah, look at that.
Yeah. They shut down the Jarrett Canyon mine. That was the big news that had this big sell-off here. But it's got this big 2-year downtrend line or downtrend channel. Kind of broke above that, kind of back testing it now, but it's below. I mean, this chart is ugly. I mean, it's below a declining 200.
It's hard to rationalize this one.
Yeah.
I kind of like BTG in the gold sector and Orla. They're not giving up much on this sell-off in gold. I thought GDX might be a buy around 30, but if we have more left on the downside in the metals, I could be early here at 30. Maybe we're going to go ahead.
Yeah, I didn't mean to interrupt you there, but yeah, that's kind of the conundrum where I have in my own mind is I see more downside in the metals, but then I look at the mining stocks and they're deeply oversold to multiple time frames, often right above support. So that's like the mining stocks look great for scaling in, but the metals, and I'm like, oh man, there's another 5% or so of downside or 10% downside here, which doesn't sound like much, but in something like gold, 10% is a lot.
Yeah, another $180. Okay, levels for silver, where you'd be looking to scale in. And are you a believer that one day, Stephen, there's going to be some type of default on delivery of silver contracts. You know, a lot of people talk about what's in the warehouse and all the paper positions. And I've even heard talk that it's not Goldman, it's Jamie Dimon's firm has a very large hypothecated gold short, and a huge move in gold could BK the JP Morgan.
Yes. A nuanced answer to that. So first of all, direct answer is yes. I'm a firm believer that silver is the most manipulated asset on the planet. And you can go way down the rabbit hole. Like, you know, JP Morgan's the custodian of SLV. They've got their vaults like adjacent to, you know, those vaults. I think there's all kinds of shenanigans happening. I think there's multiple claims of ownership for every supposed ounce on the COMEX. And whether that defaults someday, I think it will. I think it's very likely to. But I like to say that's like an upside kicker. It's not my investment. It's not my primary investment thesis, nor do I factor it into trading and investing decisions. But it's there. And if it defaults, I mean, that's just going to be like a windfall for silver investors. I think it's likely to happen. But I don't get too caught up in the news headlines of, oh, the COMEX is going to default next week, because I've heard those every week for the last 10 years.
Do you come down more on the demand for the movement to the green economy? There's in solar panels, just the demand in silver compared to production. If we don't have a depression and we're making this transition, there's just not enough silver. And people were saying that about copper, but right now it looks like there's plenty of copper, and that may be China weakness.
Yeah. With silver, I think there's a lot of bullish factors. The COMEX could default. You've got industrial demand for all these green energies and solar panels and things like that coming online over the next decade. But I think the catalyst that's going to send silver, to these levels that most of us are expecting, I think triple digits is coming in the years ahead, is going to be monetary demand, investment demand from retail investors. And, going back, it's always, you can kind of project out industrial demand. But if just a small percentage of the population says, hey, I want a little bit of silver, it's such a small market that, that's where the price goes almost vertical. At what is it, $22? Yeah, $23 silver. There's about 1 billion ounces produced every year if you include recycling. So that's about a $25 billion market globally. That is tiny. So just a small percentage of people, institutions, high net worth investors say, hey, I want a little bit of exposure to that sector. That's
is Bitcoin competition for precious metals?
Maybe a little bit. I don't really view it as a threat. I'm not a big Bitcoin person, but I welcome, the competition, free market.
You don't own any Bitcoin. It's not part of your prepping. Really. Okay.
No, I mean, I don't even have one. I bought like a few $100 back in the day.
All right.
I kind of got it sitting there. Yeah. So no, I'm not that's not to say I'm bearish on it. If Bitcoin went to 100,000, it wouldn't surprise me, and it wouldn't surprise me if it went to 10,000. So I'm kind of ambivalent. What about you? Okay.
I'm gonna, if it goes to 10,000 out, I'm looking for 14.
Okay.
And I just like the portability feature of it, and the diversification outside banks.
Yeah.
That's a major I have a hard time valuing it. That's what I use my charts for.
Yeah.
And I really don't know what the value is. But I was going to ask you about CBDCs, and we're not too far away from that. And don't you think that it's really the biggest monetary story since Bretton Woods?
Yeah.
And it's not only getting covered by the fringe. And I'm already seeing commercials on TV for this $1 where they're, I think that's what they call it, where they show, cash all wrinkled up and not getting the correct change, and how convenient and more efficient this digital coin's going to be. What's your view on that? Do you think there's going to be a lot of flight capital to precious metals because of people's hesitancy to adopt it?
Yes. Obviously, I think it's coming. I don't think don't think there's much we can do about, unfortunately. I mean, not to sound pessimistic, but that's going to be a tough one to fight because, like you said, not enough people are aware of the threats of these central bank digital currencies. I mean, it'll literally give them license to control almost every aspect of your life.
Yeah, I mean, that's what I'm saying. I think that after the Fed hiked again, after something broke, that confirmed to me that it was intentional.
Yeah.
And that they want to take these banks down. In fact, look at the difference. If you have any cash in your pocket, it comes from the Treasury.
Mm-hmm.
And the CBDCs comes from central banks.
Mm-hmm.
Okay, so it's completely a takeover of the Treasury by the Fed.
Yep.
Isn't that what we're talking about?
I agree. Yeah, it's a scary thing, and there's not much you can do to protect yourself. But one thing you can do is have physical metal stored outside of the banking system, metal that you can go put your hands on.
Yeah.
And I not even the monetary system. Not to go on a tangent, but I try and remove myself from as many of these big systems as possible. The healthcare system. Hey, we're into natural health. With the financial system, hey, let's remove myself from that as much as I can. The way to do that is with physical metals stored outside of the banking system.
You have a generator for your house if there's power problems?
I do. Yeah. I like to say I'm a practical prepper.
Okay.
Yeah. I've got a solar generator that can power got a couple of freezers stuffed with food. People say,
you have an extra room at your house?
Yeah. Yeah. We've got Berkey water filters.
For me, I mean, you have an extra room.
Dale, you're welcome. Come by anytime.
All right, Stephen. So 200-day comes in at 22. I have a lot of confluence at 22 on silver, a lot of moving averages. In fact, the dailies and the weeklies, it's like you have the daily at 22 and the weekly 50 is at 22. So when I have a couple of major moving averages that have confluence like that, it's almost like a magnet to me.
Yes. Yeah. To me, $22 silver is kind of like the equivalent of 1825, 1810 gold. That's kind of, I don't like to use that phrase back up the truck because it can imply poor risk management, but that's where I'm going to scale in aggressively if we pull back to 22 silver and 1810 gold. Those are the numbers. If someone's listening, they're like, I don't watch charts, but I got some cash. What are some good levels to watch? Yeah, I think 1810-ish in gold, 22 silver. Those would be fantastic buying opportunities. If
do you trade when you're in the cockpit?
I've been asked that a couple times. I'm gonna say no on
that one. Anything else? Anything else you want to cover with me here today, Stephen?
I mean, we could talk, Dale. I think we could talk for hours, but
yeah.
I think we covered the metals. I'm curious. I like to. Do you watch? Do you cover uranium at all?
No, but I know you do, and I know that I've been watching uranium stocks. They've been under pressure. I keep a couple up, and they could be entering some decent buying opportunities here. See, there you go. Almost looks like the bond chart.
Yeah, it does.
That low. So you like accumulating these? This is Sprott, an ETF. Okay.
Yeah, for people not familiar with the uranium sector, this is URNM. It's almost like GDX, the equivalent of GDX. It's the ETF with the bigger names in it, the Cameco's, the Kazatoproms. But yeah, the uranium, the metal itself, is held up really well, but the mining stocks are, down here in the doldrums. So from a contrarian perspective, I really like uranium. If you like the volatility of silver miners, uranium miners have the same, if not more, volatility in both directions. So it can get pretty exciting. It's a very small market, and what I like about it, there's not the COMEX, playing these paper games. It's a pure supply demand story, and we've got nuclear reactors coming online around the world. And the fact is, the price right now is too low to incentivize the new production that's going to be needed to fuel these new nuclear reactors coming online. So that doesn't mean it's going to rocket tomorrow, but I really like this sector as a contrarian.
Okay, I've heard the analogy used that as far as market cap, all it would take for the silver and gold miners to get going would just be a little garden hose
Yeah.
of money flow going in. And then when you talk about uranium, it would just be a soda straw
Yep.
that would have major impact on prices.
Yeah. There's only around 100 pure play uranium miners in the world, and most of them are very small market cap, explorers and developers. They're not even producers. So tiny, tiny market.
So, and Finland's getting a lot of good press about the low cost of utilities. That's the right country. Am I correct? It was Finland?
If memory serves me correctly, yes. Yeah, that's
So
correct.
they've moved ahead. Germany has shut theirs down. Where's the U.S. at? Do you think they're going to come on board with some of these smaller
Yes,
nuclear plants?
I
How
do.
far
Yeah.
down the road?
Well, and Japan is restarting their program, which is huge. But yeah, the United States, I think it's coming sooner rather than later. They're already starting a strategic reserve of uranium. A lot of people don't know this statistic, and it's pretty startling. Roughly 20% of our power in the power grid in the United States is powered from nuclear, 20%. And it's not just 20%, it's like the first 20% because it's base load power, right?
Yeah.
And we import almost all, like close to 100% of our uranium. And most of it is not from what you would call friendly countries. So,
Okay. Just
unless there's
Russia and China? Russia mainly.
well,
South Africa.
yeah, it's produced in Kazatomprom is the biggest producer, and is it Uzbekistan or Kazakhstan? There we go.
Okay,
Kazakhstan.
one of the stands.
Yeah,
okay.
Kazakhstan.
Right.
Yeah, one of the stands. That's a good answer.
Yeah.
But so I think there's a push right now to security of supply. With the supply chain disruptions in the last few years, to ramp up the U.S. nuclear industry.
It's just so hard to get licensing for mines. There is uranium here in America.
Yes,
there is. It's just being able to go for it.
Yeah, and it's plentiful around the world. There's not a supply problem with uranium. It's just there's a price problem because the price isn't high enough to incentivize that production.
How about lithium? I know you talked about batteries. Lithium is even more difficult to get permitting because of the toxic nature of lithium.
I'm not an expert. That could be true. I don't know. I'm not an expert in I don't really focus too much on lithium.
Okay. So we covered then the metals that are your major focus, and we got your view on bonds, and have the takeaway to everything big happens when the Fed says pause, when it comes out of Jay Powell's mouth.
Yep, I agree.
You could be long the world.
I
short
think so.
the dollar and long the world.
I think so. And if that scenario does come to fruition, where we get a really nice move in risk assets, especially silver, uranium, gold, don't be afraid to take profits along the way. I'm not talking about selling your physical, I'm talking about mining stock positions. If we do get this really nice move that I'm expecting sometime this year, probably sooner rather than later, don't be afraid to push the sell button, take some profits.
Stephen Penny saying you never go broke taking profits. Like Bernard Baruch. Baruch had a few good clients, the Kennedys and the Rockefellers.
He did.
So nice book, huh?
It was. Yeah. What was the name of that book? How to make $1 million in the stock market. He was the dancer who made $1 million. But
oh yeah. Anyway, Steve, it was worth the wait. And I want people to, follow you on Twitter, and maybe you could show your website. You have a nice little website where people could get your research and look at your great technical work.
Thanks, Dale. Yeah, I really appreciate that. silverchartist.com. It's a fully transparent over-the-shoulder service with real-time alerts. So, I share my personal portfolio, and I send a buy or sell alert out every time I either, buy or sell. But I don't claim to be perfect. People see my mistakes and all. We've also got a nice team of contributors. I know you've had David Brady on. He's in there posting almost every day. So trading ideas, trade alerts, and a nice community over at silverchartist.com. So thank you so much for inviting me, Dale. Really appreciate it.
Yeah, a lot of wisdom from David, and like minds, they attract each other. And I hope we could do this again, Stephen. I wish you and all of your subscribers that pips just rain down on you guys. Thanks, after the pause, and have it be life-changing for many people to give them a chance to deal with what kind of economy is out there outside our front doors.
Yeah, likewise. Wish the same to you and your listeners. I'd like to say, a lot of people are in these markets because they want to, go buy a boat or a car or some kind of thing. There's nothing wrong with that stuff. But what kind of sets us apart is our tagline is time freedom to pursue life's higher callings, things of eternal significance. That's why we want that financial freedom, so we can focus on the things that really matter in life, things that are more important than these markets. But having some money and having that padding is going to help us to really weather the things that are coming down the road.
Laying up treasure in heaven, Stephen Penny.
Yes, sir.
Great meeting you, buddy.
Likewise, Dale. Thank you.
I look forward to talking to you again soon.
Yes, sir.
Follow Stephen, Silver Chartist, easy to remember, and start doing it before we start getting up to those levels where, the FOMO and the mania happens. You want to get in before the mania. So again, Stephen, good hunting. And you know what? You have become. You're now, after an interview with me, my trading warrior brother.
Awesome. Love it.
All right, Stephen. Take care and the best. I'm rooting for you.
Thanks, sir. Really appreciate it.
All right. That's a wrap, everyone. Check out Stephen. Check him out at the Silver Chartist, at Silver Chartist, and his website. Good luck.
Thanks, sir.
Don't just count your pips, count your blessings. That's my tagline, Stephen.
Love it.
Grateful that you came.